Hello investors and traders, today I'll speak about 3 best dividend stocks to buy right now, and as usual let's start with the first company. It's Qualcomm. So Qualcomm, it's IT company, dividend yield more than 3%. Let's have a look on its chart. So here look, now the price $103. It's already down more than 40% from its high levels. Here I see the closest support level is about 90 bucks, so we're very close to this level. But don't forget that now the dividend yield already more than 3%, so for me it's already very attractive. So let's have a look on these fundamental parameters of the company. So look, the market cap more than 100 billion bucks, dividend yield, the forward one, is more than 3%. Of course, we see a nice P ratio, price per earning is 11. It's the lowest value for the last years, and the PS around 3. So as I see now, the stock is cheap. Also, if you look at the performance, for me very impressive performance. We see that the revenue of this company doubled actually for last 5 years, and the marginality also increased. It was 18% 22, and for the last year it's very close to 30%. By the way, the gross profit margin 58%, quite high marginality. I remind you that Qualcomm is engaged in development, design, and provision of digital telecommunications product and services. Let's have a look on the revenue breakdown. So most of its revenue, of course, company earn in the CDMA technologies, and on the second place 14% is technology licensing. Most of revenue the company earn in China, more than 60%. Also on the second place Vietnam, 13, and for example UK about 3%. Let's have a look on the Qualcomm dividend history. You see that the dividend yield around 3%. The dividend increase track record 21 years. The annualized 3-year dividend grow about 6%, and the payout ratio only 32. So there is a huge room even to increase the dividend payments, and of course for me as a dividend investor, more than 20% of increasing its dividends is very attractive payments, attractive data. And let's come back to the chart. Here the momentum indicator and RSI on the weekly time frame is already 35, so telling us that the stock already oversold. So as for me, it can be a nice time and nice point to buy the stock. Also, let's have a look on the forecast for this company. Look, based on the 32 analysts giving the stock rating of this company for the last 3 months, we see that 17 strong buy and 4 strong buy. So most the average recommendation for this company to buy, and if you know the price is about 100 bucks, so the average potential at 132, it's meaning that the average upside potential is more than 27%. Let's have a look on the second stock for today. It's United Health. Of course, it's the company from a healthcare sector. Its dividend yield more than 1%. If I look at the chart, it's traded in increasing channel for last 3 years. Now it traded at the lower border of this channel, and here I think it can be a nice level to pick the stock. Let's have a look on the fundamentals of this company. Market cap, it's a huge company, more than 400 billion bucks. The dividend yield 1.3, and let's have a look on the performance. Look, here it's very impressive. It's great because the revenue and the marginality, and by the way, net income of this company for the last 5 years continuous steady growth. The valuation 22, it's not cheap. Still not cheap, it's very close to its average value, but the PS, price per revenue 1.3, it's very cheap. Let's have a look on it, dividend history of this company. So the dividend yield 1.3%, the dividend increase track record 13%, the annualized 3-year dividend growth, pay attention, more than 15%. It's a very high and a very good figure. And the dividend payout ratio also very low, it's only 30%. So here if I compose these two figures, the growth rate and the payout, for me as a dividend investor, as a person who like to receive dividend payments, passive income, of course, for me it look very attractive as a stock picker. If we look on the projections, the EPS, earning per share, so in the next 4 years it's expected, of course, to grow, and the revenue also expected to show a slight growth. No, at least not decreased. Also, it's a very good sign. And let's move to the last stock for today. It's STAG Industrial with the ticker STAG. So its dividend yield more than 4%. If we look on the chart, here I think it was a correction. The first, the second, the third, the fourth, and the fifth. Here, most probably in October 22, the correction finished, and now I'm expecting to see another impulse. So it was most probably the first wave, the second may finish, and now we may see the third wave. Usually, by the way, the third wave is the largest wave in the impulse. Also using the Fibonacci, I can tell you what can be the target, my target for this third wave. Yes, so it can be here 46 bucks. Yeah, let's put this level here. So in this case, from the current level, the growth potential is about 30%. So a dividend paying company, and of course with a upside potential about 30%. Let's have a look on it fundamental parameters. So it's a rate, by the way, a real estate investment trust which focuses on acquisition, ownership, and operation of single tenant industrial properties throughout the US. It was founded more than 10 years ago and headquartered in Boston. So market cap, by the way, it's the smallest company in our video today. It's only 6 billion bucks, but look, the dividend yield more than 4%. Also the PE, not cheap now, but it's quite good. It's better than 40, it's better than 90 a few years ago. So the valuation not cheap, but look, of course it's a risky company, but it's a growth story. The revenue of this company increased, the marginality also quite high, the gross margin profit is quite high for me. So it's a classical rate. Of course it's a risky one because the payout ratio here is more than 100%, but look, the dividend, it's dividend history. The company last years continued to increase its dividend payments. By the way, here the dividend yield is very high, 5%, 4%, 3%. So it's of course it's a lot. So generally speaking, STAG the riskiest company for today, but don't forget that here you may receive a dividend payments. By the way, I remind you that here the dividend payments are monthly, so every single month you receive a nice dividend payments. And of course don't forget about the capital gain, the growth stock potential in this case. So generally speaking, Qualcomm with the ticker QCOM and United Health with the ticker UNH are the three dividend stocks for today. Nice potential to grow, nice marginality for this company. And of course, if you like this video, so press the like button, don't forget to subscribe to my channel, and see you on the next time. Bye.